Welcome to the DebtCircle podcast. I'm Vijendra. Today is July 29th, 2026. Coming up, Gift City's social infrastructure push, fund managers building dedicated REIT and InvIT portfolios, and RBI's plan to deepen bond markets for its 2047 goals.
Gift City is accelerating social infrastructure with a multi-sport arena opening by September 2026, a golf entertainment facility spanning 84,744 square feet by January 2027, and a 750,000 square feet destination mall.
These facilities boost Gift City's appeal as a financial hub, matching global trends where lifestyle amenities drive corporate location choices and support its push to attract multinationals and international professionals.
India's REIT and InvIT market manages rupees 10 trillion across 32 listed trusts, expected to double to over rupees 20 trillion by 2030. But liquidity limits managed portfolios to around rupees 800 to 1,000 crore, challenging larger funds.
Fund managers now offer diversified products like mutual funds and AIFs for broader access. And listings from Cube Highways and Horizon Parks are drawing family offices seeking steady returns.
RBI's deputy governor stressed improving bond market quality over size to ease reliance on bank loans, key for India's 2047 goals. A big challenge remains poor credit risk pricing.
Shifting from bank-led funding to diversified bond markets will free up banks and give companies more efficient long-term capital access.
India Gold Metaverse raised 300 crores rupees to build India's first integrated digital gold infrastructure, combining Elanzia, Ram Mudra's blockchain gold, Gold Sense's AI purity checks, and Bullion X.
It shows strong confidence in digitizing India's gold sector, aiming to formalize the economy and boost liquidity and transparency.
The rupee strengthened to 95.64 against the dollar on July 28th, as crude fell and the dollar index dropped to 100.31. The Sensex closed at 76,850.44, Nifty at 24,023.45.
Still, foreign institutional investors sold equities worth rupees 1,688 crores, showing mixed sentiment despite the gains.
Small-ticket consumer loans now drive retail credit growth. Non-housing loans are 58.4% of household debt as of March 2026. The consumer durable loan portfolio grew 20.8% to 1 lakh crore rupees in FY26.
NBFCs like Bajaj Finance and Cholamandalam are expanding aggressively, though lenders stay cautious about inflation risks slowing growth in FY27.
Government bonds rallied Monday. The 6.94% 2036 bond yield dropped from 6.8253% to 6.7739%, its sharpest fall in 2 months after the US-Iran ceasefire. RBI is expected to hold rates at 5.25% next week.
Brent crude fell about 4%, then another 9% in Asian trading, easing global inflation worries ahead of the Fed's own decision.
Policy Bazaar launched US dollar-denominated term insurance for NRIs via Gift City's IFSC, with premiums and payouts in dollars to hedge against rupee depreciation.
This strengthens Gift City's role as a financial hub for the Indian diaspora, giving NRIs compliant access to dollar-linked coverage.
Kotak Mahindra Bank is raising $600 million via a 3-year, 6-month overseas syndicated loan, a rare foreign currency borrowing by an Indian private bank, supporting FCNRB funding. It reflects Indian banks diversifying beyond domestic sources and deepening integration with global capital markets.
Tamil Nadu Mercantile Bank's net profit rose 35% to Rs 412 crores in Q1, with net interest margin improving to 4.3%. Gross NPAs fell to 0.73%. Advances grew 27% to Rs 57,306 crores, with retail loans up 36%, a strong diversified quarter.
Tata Power's board approved raising up to 4,500 crores rupees via non-convertible debentures, mainly to refinance existing loans.
The flexible currency and tranche structure helps Tata Power optimize funding costs amid a shifting rate environment.
HUDCO's net profit jumped 35% to 851 crores rupees in Q1 2026, backed by 3,710 crores rupees in interest income.
Credit loss provisions fell from Rs 1,702 crores to Rs 621 crores, signaling improved asset quality.
Bellora Impact posted a net profit of 7.90 crores, a turnaround from last year's loss of 2.11 crores, with revenue jumping to 141.92 crores.
That's a remarkable shift, strong execution that should boost investor confidence going forward.
RBI proposed all securitization notes from commercial banks be held in dematerialized form, with the minimum investment staying at 1 crore rupees to keep it institutional.
Full implementation is expected by October 1st, 2026, aligning with SEBI's public offer rules.
Public sector banks sold stressed assets worth Rs 50,000 crores to ARCs in Q1, ahead of RBI's expected credit loss framework starting April 2027.
But the Supreme Court flagged concerns about ARCs settling debts far below original values. Regulatory changes may follow.
Bank of Baroda suffered a major data breach, exposing about 1 terabyte of sensitive data, including Aadhaar numbers and loan records. No group has claimed responsibility.
It's a serious cybersecurity lapse, and market confidence could suffer if the bank doesn't act quickly and transparently.
Bond investors are paying up to hedge against the 10-year swap rate hitting 6%, over 2 points above the current 4.23%, amid fears of Fed rate hikes.
Rising swaption volumes show markets bracing for a complex, uncertain policy path ahead.
Manba Finance's profit jumped 36.02% year-on-year to 13.26 crores rupees in Q1 FY27, with Stage 3 NPAs down to 3.41%.
With a capital adequacy ratio of 24.40% and expansion into EV financing, it's set for sustainable growth.
Tata Power's consolidated profit rose 11% to 1,400 crore rupees in Q1 FY27 on strong renewables, though standalone profit fell 46.67% on higher fuel costs.
EBITDA margin contracted to 21.07%, showing renewables are cushioning cost pressures elsewhere.
Canara Bank will front-load 12 to 13,000 crores of rupees in credit loss provisioning within 2 years starting April 2027, cutting capital adequacy by about 60 basis points.
To offset that, they'll raise rupees 8,000 crores via Tier 1 and Tier 2 bonds, while advances grew 21%.
The rupee opened stronger at 95.72 against the dollar, gaining 14 paise on foreign inflows and RBI intervention.
Compared to weaker Asian currencies like the Indonesian rupiah and Korean won, the rupee is holding up comparatively well.
India attracted nearly $32 billion in foreign capital via RBI special measures since June, with over 26 billion from FCNRB deposits in just 45 days.
CBI projects FCNRB deposits could reach $65 to $70 billion, though the rupee remains near record lows.
Cholamandalam raised 7,917 crores rupees via NCDs and subordinated debt in Q1 FY27, with profit after tax up 46% to 1,654 crores rupees.
Loan disbursements grew 22% to rupees 29,612 crores, strengthening their position in vehicle finance and gold loans.
Private banks collected 4,948 crores rupees in minimum balance penalties in FY25-26, more than double public sector banks combined. HDFC Bank led with 1,798 crores rupees.
Meanwhile, 10 of 12 public sector banks have waived such charges, protecting around 730 million basic savings accounts.
RBI repurchased government securities worth 12,604 crores rupees in a buyback auction, mainly on the 7.33% GS 2026 bond.
This helps optimize the redemption schedule while supporting a banking system liquidity surplus of over rupees 1,01,000 crores.
Public sector banks posted a record combined net profit of 1.98 trillion rupees in FY26, with gross NPAs dropping to 1.9% from 2.6%.
Retail loans rose 19.8% and MSME lending 19.6%, a strong signal of sector-wide recovery and stability.